Good evening. This is Brian Shannon from Alpha Trends Blogspot. It is Monday, the 18th of June, 2007. We're going to go ahead and take a look at some stocks for trading on Tuesday. Shares of Mediacom Communications recently broke out on some pretty good volume about 3 weeks ago, and it's pulled back since to the rising 20-day moving average, where it looks like it found some support. Got going a little bit again here, and looks like it's holding above this little level of resistance. We'll look at that in a moment on a shorter term time frame. Let's back it up instead to a weekly time frame, see where the stock has the potential to go. And you can see it's at multi-year high, and on the monthly time frame we can change the scaling here and see that it doesn't really look like there's much in the way of resistance, especially once we get above that $10 level or so. Perhaps it's got room up to about $13 a share, and there's a pretty good short position in this stock as well. You might want to check that out. But here's how I think we ought to play the stock. I think it's a buy on strength above $9.70. That's what I'd like to purchase it. And then I'd set a stop down below today's low. I think $9.55 would be safe. That'd be only 15 cents of risk in here, and I think you've got a good chance of it seeing the old highs here at least. So the $10.40 is going to officially be my price target, and that will give us 70 cents of upside for just 15 cents of risk. Let's take a look at a short sale, which I think it looks pretty good, which is SEI Investments, symbol SEIC. And you can see here that the 10-day moving average is below the 20, which is below the 50, and they're all declining. The stock's had some resistance in here recently, or some trouble with this 200-day moving average. Looks like a little battle being fought in here. But if it does get moving lower, I think it's probably due to test these lows here near 57.50, and that'll be our price objective. On the 10-minute time frame, it looks like the buyers tried to regain control. That failed. So from failed moves often come fast moves, and I think the way to play this stock is to sell it short on weakness below $58.70. I think your stop can then go to about $59.03, so 33 cents of risk. And with a target down at 57.5, that will give us a potential target of $1.20 for just 33 cents of risk, so about a 1 to 4 risk-reward ratio. Last stock we're going to look at here is a pretty speculative one. I have no clue what got people so excited about this 2-3 weeks ago, but the stock did make a fantastic move where it more than doubled in 2 days. It's pulled back pretty steadily since then. You can see it recaptured its 10-day moving average after finding support at the 20-day moving average here in the daily time frame. Looking at a weekly time frame, it looks like these old highs from last year are where the stock also found support, so that gives us more reason for thinking that this might be a sustainable level of support. We'll use a stop, of course, but this is a monthly time frame. You can see it's all-time highs. So here's how I think we ought to play the stock. You can see that this is that pullback. It came down. It was held underneath this 5-day moving average. It just broke above that today, and it did so with some nice volume here about midday. So the way I'd like to play this stock would be to purchase it above $10.95. I think above $10.95, that tells me the buyers are back in control, and I think it's got some momentum at that point, so a stop that could then go at $10.78. That's just 17 cents of risk in this stock, and I think it has the potential to make it up towards about $12.25 or so, possibly higher, but $12.25 really isn't that far away. When you look at where it's been recently and what a bounce might entail, I think it might get that initial resistance right here. But once it punches up through there, I think your next target is that $12.25. So that would be $1.30 away with just 17 cents of risk. That makes for a great risk reward in shares of NOVC.